Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's caffeinating appropriately for this first week of October. It's going to be a Lulu. We've got, well, let's take a look at the calendar here while I've got the Trading Economics website up. Normally, ISM manufacturing, it's more on the side of an inflation gauge, would be a bigger deal. But take a look. We have some guy named Powell. I think he's kind of important. He's going to be talking at 11 o'clock. The good thing about that is, well, twofold. One, it's going to leave most of the morning available to some day trading. So we can start off our 65-minute window, look for some setups, but we'll have to be more hesitant, obviously, as we get to Powell, with a very high likelihood that we're going to see kind of a wait and see type, well, unfortunately, wait and see type holding pattern where a lot of traders may not want to step out in front of whatever it is he's going to say. And it's not just Powell. I mean, take a look at the Fed parade here we have of FOMC chuckleheads. Powell, Harker, Barr, Williams, Meester. It's a mess. That's what it is. I wanted to say Mester. All of this is just going to be, generally speaking, a mess. What will be interesting is Powell is going to be speaking after we get the ISM data, but before we get the JOLTS data. So this is going to be a tough week, gang. I don't want to mince words at all. Not because we're not in the fall trading season, not because we don't have the last FOMC meeting behind us. We've got Q3 behind us. Lots of reason to be optimistic about the seasonal expectation of a choppy bottoming process here the first couple weeks of October to about a mid-November month rally. That said, well, at least we have the near-term reprieve of the shutdown not going to happen, but we've just kicked the can, right? So it's still looming over. It's not a done deal. It's just a deal for now. And then we have Bostic, JOLTS. This is going to be an interesting week. And this is the week before we really officially start earnings season with all of the financials. So take a look at the calendar because when we have data and the FOMC members, every little bit of data, they can adjust their messaging. That might make it a little less awful, believe it or not. The fact that the overall data is coming in tandem with the FOMC members. But I'm just sort of speculating based on past weeks where we have data and a steady diet of FOMC members speaking. For example, we have non-farm on Friday. We have Waller coming up at noon. So we get to see the data, and then we get to get a little bit of a read on how an FOMC member, not the guy, not Powell, we get to see how a FOMC member is interpreting the data, presuming it's going to reflect what the group thinks. So it's going to be a fairly interesting week, and we'll just go from there. So for now, we have at least a bit of a reprieve, and we're going into, let's see, I'm just taking a quick look at the calendar here. Bear with me. Yeah, but for the most part, we're good, right? For the most part, we can just kind of operate without a lot of concern over at least the biggest wild card of the week, which is that shutdown. The other wild card, let me just mention this. There is the Challenger job cuts on Thursday. Not one that we would see on Forex Factory, not one that we talk about a lot, but the Challenger grain Christmas data is kind of interesting. Insiders tend to look at it. It's released on 7:30 on Thursday. It could be an interesting look at foreshadowing, perhaps, what non-farm on Friday is going to look like. So we might get we'll talk about this more during the week, but we might get a very interesting day trading week. I'm very optimistic about that. And if all the data starts to create those bigger swings that we can take advantage of on 1-hour charts, again, pretty stoked about the possibility of some swings coming up into this month because we've been day trading a lot. And I would love to start to see these daily price movement ranges come into focus. One of the things that I mentioned in Friday's video was the fact that we have this, and let me show you here. There we go. We have this daily price movement range in play. And can we get perhaps a little bounce off the gray area and move high into the yellow area? Bounce off the gray area, move into the yellow area. So gray to gold, yellow, whatever you want to call it. That might be setting up again. Let's see what happens around 4,300. So just kind of taking advantage of smaller moves. Remember, gang, this is not the time to make grand proclamations about whether we're going to 4,500 or whether we're going to 4,100. Doesn't matter. Targets are not trades, right? And I think most new, inexperienced traders tend to think targets are trades. As long as I know where the market's going, I'll just get in. Experienced traders know risk management is trading. So be careful, because it's a squiggly little line into thinking targets are trades versus all I can do is control risk on the path to whatever it is I think my profit target is. Be careful, gang. But anyways, looking at an interesting open here where we do have a red. Let's see, we are a downtrend on the 5-minute bond market. We are a downtrend on the NASDAQ. We're a downtrend on the Dow, downtrend on the S&P, downtrend on the Russell. Crude oil is actually neutral. So we have mostly weakness in the indices this morning, as well as weakness in the bond market, which is a higher yield environment, which stocks tend to not like, but it has not necessarily been an issue overall, because if you think about yields, they've been dropping. The ZB, not yields, the ZB has been dropping all year. Yields have been higher all year, and yet equities have been, for the most part, climbing. So ditch this notion that higher yields are some sort of death knell to stocks. Remember, when it comes to yield, it's more about a tipping point than it is a trend, right? You might say, Rog, but I hear all the time, a strong dollar and high yields are terrible. Pull up the charts, right? Shut that noise off, because it's just noise and it's dogma. Pull up the chart and look at the 6E, right? Don't look at the dollar index, because the best way to look at the dollar is a 6E. Those of you in the mastery know how to do this, but let me share with everybody. Look at the 6E. If it's not moving like the S&P, and I mean pretty close in terms of scale and direction, you don't have a high correlation of a negative or inverse movement to equities. So when 60 in the indices are moving together, that means dollar is moving negatively, or a negative correlation to the indices. And that's simply not happening. Not on a regular basis, not on a systematic basis. Same thing goes with bonds. The ZB has been trending lower all year long. That means yields have been higher all year long, and yet equities have been generally higher all year long. So remember, gang, don't just get spoon-fed things that other people are saying because they were spoon-fed it as well. Ask yourself, is this true, right? Even when I say something, go back, pull the charts up and see, hey, is this true? And you'll find that it just isn't. So the other thing I want to mention is when it comes to yields, the reason yields are a concern as they get higher and higher is at some point, high dividend yielding stocks and ETFs are going to succumb to the temptation, the alternative of a bond yielding something at a competitive rate. So the real trick is not what's the trend in bonds. Have we reached that tipping point, right? And that's where you go and take a look at some of the aristocrats and the kings, and you look at high dividend yielding stocks and sectors and say, all right, now is it a bit of a horse race? Because when it is, that's where the bonds are more appealing than the stocks, and those stocks will be sold. That's how that works. It's a tipping point, not a trend issue. So anyways, that's where we sit as we go into October. And my least favorite of the indices is the Russell. Not because I have anything against it, but because KRE, the heaviest weighted sector, has yet to get above the 200 since the tumble back in March. My favorite sector is the NAS. It's firing on all cylinders. Probably the wobbliest is the consumer discretionary sector. All right. And so that's where we're going to operate going forward. But let's get to the questions. I see a handful of them coming through. Fantastic. Good morning. Good morning. See, D. Bolton, Fed Watch November shift. Yeah, we'll take a look at that when I see you in the mastery this morning. Good stuff. Love that you're looking at it. Fantastic. Fantastic. Let's see. JCW says, good morning. Happy to be here live for the first time. Welcome. Welcome. It's so glad that you could make it. Most excellent. Earnings season starts in 2 weeks. Yes. So one of the things that I like to do with earnings, gang, is what site do I look at for earnings? And my preferred site for earnings is Estimize. And I like Estimize a lot. Now I use my StockTwits login to get into Estimize. So I'll just log in right now. And I'm able to put together a list of names that I am interested in, right? I don't want to see some cutesy calendar with 1,000 logos. Don't need it, right? Some sites do that. I don't need that. What I want is a list of companies who are who have the high concentration weighting in the indices and in the important sectors. I want to curate what that list should look like. And maybe there are other sites that'll let me do it, but Estimize definitely lets me do it. So that way I can track what I want to track. Here's the other thing I love. Oh, sorry, gang. Sorry, the dog's. Girl, I know you're very protective. Chill out, chill out. Sorry. The attack dog. Yes. Giving me back talk. Anyway, she doesn't like earnings season either. So if you take a look at this, what I love is rather than being told what earnings are coming out this week, which is really not that helpful, I can actually look out and say, hey, what's coming in 2 weeks, 3 weeks, a month? I can prepare far, far, far in advance with a really easy curated list. So take the time to follow those stocks that you want to follow. Take the time to follow the stocks that are heavily weighted in the sectors and in the indices. And I'm a big fan of this. And you can do this for free, gang. I like this site a lot during this season, going into, earnings season. I'll even be happier when it's gone. But for now, we have to be aware of the disproportionate volatility that any one of these stocks can create in the indices and in the sectors. All right. So yes, happy good morning. Start of the quarter. Yes, absolutely. All right. Next up is, bark, bark, bark. The doggy indicate. Yes, the pup is in the house. I know my sector secrets folks know when the pup is in the office. Yeah, we tend to have some good trades. I don't know if she's going to come with me every day to the other office. I have an office 2 doors down now, and I'm not sure that she's going to come with me to the other office, but I might have to have her there just for good luck. All right. Okay, so let's jump on over to, let's go back to the charts here. Let's jump on over to the indices. So if I take a look at the NASDAQ this morning, if you checked out the video on Friday, and thank you for everyone who watched. Thank you for everyone who left a comment. I do appreciate it. I actually shared with you all a lot of important things that you can do for free, manually, or with any number of free tools each and every morning. And probably the most important of those things is just simply to know where the previous session close is. And then after that, you can look at certain ranges throughout the morning. So for example, I could take a pre-market range, 5-minute pre-market range, and have a zone that gives me sort of a sentiment read on the morning. Now, clearly we're below the previous session close, and inherent with that is a certain amount of bearishness. I've got a 5-minute multi-trend. I don't really need anything else to tell me that this is a weak start to the day, a weak start to Monday, but not every single day is going to be this clear in terms of structure, right? We're not going to always have a very clear red multi-trend or green multi-trend. We're not always going to have a very clear stance above or below the previous session's close. So if you watch that video from Friday already, what are y'all thinking? Okay, Rog, you said mark the high and low of the first 5 minutes, the 9:30 to 9:35 5-minute window. And then I showed you how I look at a zone within that, right? You can do that absolutely manually. The other thing is, and I'll do this with you all in the Sector Secrets Mastery, pre-market, right? My futures traders or traders who want a little bit of an edge before the bell rings. There's another 5-minute range you can look at. Now, granted, gang, yes, I've automated that, but you don't need to. This is not a mystical unicorn level that I'm not going to tell you how it's calculated. That's not how I operate, right? The only way we can be great at traders is to understand what it is that we're using. Yeah. So remember, What we're trying to do basically is look at certain times of day and a 5-minute window. The two windows I like the best are a 5-minute window and a 30-minute window, right? So the first 5-minute window is really going to accompany the open of treasuries. A second 5-minute window, which is the one that's really helpful to us in the morning, is that 9:30 to 9:35. Check out the video from Friday. It's going to give you a tremendous edge on the morning. And that's why I say really it's 9:17, right? You can see on the screen there. So I'm going to be in the so I'll give you an example. I'm going to be in the Sector Secrets Mastery in just a few minutes. And what we're going to do is we're going to start to break down our notes for the day. So I'm going to scroll on down. We do these all the time. I'm going to scroll on down to Monday. And then once I'm there, we're going to ask ourselves a few basic questions. Once we're there, I like to list all these questions. So once we're there, I'm going to ask ourselves, what's the structure of the indices? What's the structure of the heavily weighted sectors? And I'm going to use the multi-trend down here. By the way, the multi-trend is a study of 4 exponential moving averages, right? So by looking at those moving averages, exponential moving averages, I get an understanding of momentum and I get an understanding of trend. This is why this is a staple in the mastery, because structure dictates strategy, period. I'm not trading my favorite stock. I'm not trading my favorite index. I'm not trading my favorite entry strategy. I'm looking at what the market's doing. Then I'm looking at my golf bag and I'm finding the club appropriate for the shot. Or I'm going through my tackle box and I'm finding the best lure for the environment that I'm in, right? We have to use the tool that's appropriate for the job. And the job here is dictated by what's the structure, right? So if you're not starting off with that, please, it doesn't have to be mine. Just have a way to say, in a very easy, at a glance way to say, is this an uptrend or a downtrend? Is the momentum bullish or is the momentum bearish? And have a real time ability to see those transitions, whatever it may be, right? It could be this. I happen to think it's the best, but of course I do. It's my tool, right? So start with something in that regard. So ultimately, I'm going to kick it off with, all right, this is what the structure is. And we're going to find the relative outperformers. Relative to what? In this week's Top Tier Outlook, I get into what the common mistake is that traders have when it comes to putting together the list of what they trade. Relative performance means it's relative to something. In this world, in the Sector Secrets Mastery, it's relative to the high concentration weighting that everyone has to deal with. There's nobody that's immune to the high concentration weighting of the market. S&P, NASDAQ, Dow, all very high concentration weighted. And then ultimately, what we're going to also do is then go down and do the same thing at the sector level. And there's your list, right? I'm usually looking at less than 21 symbols per day. Less than. It's usually half that. All right. By the way, the bots bugging me saying, hey, when are we going to show you all the results from our mastery from September? Tomorrow at Countdown Trader. Yes, tomorrow we're going to release the video and I'm going to walk through the good, bad, and ugly. Mostly good, mostly really good for September, but I'm going to show you mistakes that were made, losses, everything from September, and that'll be at Countdown Trader tomorrow. So if you haven't already signed up to get the emails from there, do that. It's Countdown, www.countdowntrader.com. All right, gang, have a great one. I will talk with you soon. Be good to each other. Tomorrow, same time, same station.